stocks. Good morning, everyone. It is Monday. It's September 8th, and we are about 28 minutes before the stock market will open. We had a mixed week last week where we saw some stocks really do well and some stocks not so much. We had some stocks selling off, some stocks gaining, and the month of September could come with some sell-offs. So not completely out of the question if we have some negative days, but I think today this market's going to open in the green slightly. So it's not no major rally. A couple of stocks are advancing. If we look at the weekly heat map, last week, looks like Google had a good week, up 10%, and Google's had a terrific month. I don't know if you've glanced at Google, but it's been doing really well. Broadcom had a terrific week. Tesla had a good week. Apple had a good week. I think the whole Department of Justice, getting off Google's back and saying, okay, we're not going to make you break up, and we're not going to stop the payments over to Apple of something like $20 billion or something a year for Google to be the default search engine that iPhones are delivered with. And that gives Google, it continues to be the dominant search engine. So week was good for those companies. So before we talk further about stocks, let me say hello to Daryl. How you doing, Daryl?
Doing wonderful. How are you? Good to be here this morning. Hello, everyone.
I'm doing great. Last week was really interesting and really enjoyed the watch party on Broadcom. Boy, Broadcom surprised me. When you and I covered it on the watch party and looked at the earnings, the stock was kind of bouncing up and down, but didn't have any big move, right? But the following day, holy smokes, it took off. It was up upwards of 14% at one point, and it settled down a little over 10. That I thought that was incredible because that's a huge cap stock.
Right.
Yeah. Were you surprised by the price action on it the following day?
I think it had a black candle. Let me double check real quick. Yeah, it was a pretty big black candle. So it jumped up to 356 or so at the open. Let me look. Yeah, 355.78. And then it pulled back throughout the day to 334. But still, that's a big move.
Yeah.
That is a really big move.
And the other reason why I think it's a big move is when earnings were announced, the stock didn't move all that much, but the following day it just took off. And I think there was a story that Broadcom's going to begin to design a chip for OpenAI, and that's what caused a lot of investors to be excited about Broadcom. So interesting that these companies, as you can see, some companies are moving up. They're taking the escalator up to higher stock prices, but some stocks like NVIDIA went down. NVIDIA being the most valuable company, AMD, Texas Instruments went down, Microsoft, substantial, decrement to their stock price. Oil had a tough week. Utilities were down, and financials were down.
Yeah, Microsoft's back under 500.
Mm-hmm. Yeah,
they'd been over 500 since about the second week of July. I think they were right around 500, and now they're back below it.
Yeah. Microsoft's been kind of a pretty, I'm going to say, stable of the big stocks, pretty stable investment. If you bought into them, you've done well. So that has been looking good for them. And let me glance on the monthly heat map, see how the month is played out. And you see that, NVIDIA's down over the month. NVIDIA's Avgo, Broadcom is up. Apple has really come back. They need to keep coming back. I think they're still in the red year to date. Google, man, 20%. Go Google. Now that is really showing up in my portfolio because I own a lot of Google. So keep going up, Google. Arista Networks, really nice gain. Amazon, real nice gain. Berkshire, nice gain. Bank of America. Tesla, United Health up 30.88%. And we talked about United Health at length on these streams. I've maintained a opinion that the stock is just way too discounted for the quality of company it is. Some famous investors jumped in the third quarter. A lot of things have made United Health really rise, and I don't think it's going to stop at a 30% rise. I think it's going to keep going up. I think United Health is going to be a $600 priced stock in the next 18 months. We'll see how that plays out. All right, so let me say good morning to some people, starting with our newest member is Jack Lee. Thank you, Jack, for joining the channel. And on these live streams, you can request a stock to be reviewed, and that's part of your membership perk. There's also a list of perks you get if you email me at victorhinvesting@gmail.com. I'll get you that list, and you could enjoy the benefits of being a member. Thank you very much. Looks like Saeed. Good morning, sir. A regular. And thanks for the question you sent me over email. Carlos, how are you, sir? It is early in your neck of the woods. I appreciate you tuning in, getting ready to trade in 20 minutes. For Algorithm, how you doing, sir? Very good morning to you, sir. All right, so let's get cracking on some stocks. I think we wanted to go over an economic report that Daryl had prepared, kind of get the juices flowing in our investing minds. And then we're going to jump into some stocks that we wanted to take a look at. If you're a member, you want to see a stock symbol, put it in the chat. If you're not a member, a $5 super chat gets you your symbol analyzed. But before we do that, Daryl, take us away.
Yeah, so I do follow economic data pretty closely, and I posted in the Discord just so everyone's aware of what these numbers do. Some of them can be really market moving, and some of them, like this first one here tomorrow, this is an annual revision. So non-farm payrolls is always a big report in the first week of each month, which can definitely be market moving like it was on last Friday. But this particular report would normally be something the market completely ignores, and that's the annual revision. Normally, they would never look at that. But given the weakness in the labor market right now, this one could be somewhat more important tomorrow.
Mm-hmm.
I'm going to keep an eye on that one. And then Wednesday, something I like to look at, it's really not terribly important as far as market movement, but is mortgage applications. So in the prior week, they were down 1.2%. This will tell you a lot about the mortgage market. And then more important is the PPI and the core PPI that will also be on Wednesday. Any big move in these numbers will tell us what the wholesale inflation is doing. So last time it was up 0.9%, and typically it's around 0.3%. 0.3% is also what's expected, but this was a big number, and cause some consternation in the markets. And then the next day, which would be Thursday, we get the CPI, and that's expected to be 0.3%. It was 0.2% prior. So most of the inflation at this point has been in the producer side, the wholesale side. Then always important to me is the initial jobless claims and
Yep.
continuing job claims. Sometimes they can move the markets and other times they don't. They are expecting a little bit of a rise this week from the 237 prior to 240 this week. And then I like to keep an eye on the continuing jobless claims because that tells or gives me some insight into when someone loses their job and they're looking for another one, how quickly can they find a job? If this number is increasing, then it tells you that the trying to get a job is getting harder. And then Friday, this one can move the market. It's been pretty low. The Michigan consumer sentiment, it's been pretty low. They're expecting 59.2, and it was 58.2 prior. So those are the economic reports that I'll be watching for this week. Most of these get reported by 9 o'clock in the morning, and most of them get published by 7:30 in the morning.
So the Federal Reserve is going to meet September 16th and 17th.
Yes,
and
sir.
on the 17th is when they'll say, we would like to move interest rates and we'd like to have a quarter percent decrease or a half. That's what we're expecting, one or the other. And I think all this economic data is kind of giving the investing community kind of an educated guess as to what's going to happen with interest rates. So if the economic data comes in and it's bad that the economy is experiencing inflation and job loss and higher unemployment, it is going to be generally bad news for the economy. And it's going to lead to the expectation that we're probably going to see potentially a 0.5 point rate cut, which is kind of, it's good news, bad news. Good news is interest rates are falling. Bad news is they're falling because the economy is getting worse. So first, would you agree, or is there a different a difference in kind of interpretation that you have?
I wholeheartedly agree with what you said. If you looked at the market action on Friday, initially it was up actually quite a bit after the jobs report because it was so weak. And then I think it took about an hour for the markets to figure out, hey, this isn't so good. If the economy is weakening, then getting a quarter or a 0.5 point rate cut may not mean much for equities because we do have a weakening economy. So I definitely saw the shift Friday early morning in that thinking. And if you start looking at any kind of news report, you start seeing the recession word come back into play.
And I think interest rate changes, it's not like, evenly spread across all stocks. Some stocks will be hit harder than others, and some stocks will rally. So if we have lower interest rates, maybe Home Depots are like, okay, great. Well, Home Depot has a mixed bag because I think they were saying that the apprehension they're seeing in their customer is the economic uncertainty. And if you have job losses, the economic uncertainty is getting worse, not better. So there'll be some pockets in the market that are going to cheer lowering of interest rates. And some pockets of the economy are going to be like, oh no, we have a recession upon us, or we're potentially going to have a recession. So we'll let that play out. Now, I'm going to just kind of take a step back and say, there's in investing, right? It's already super difficult. And I'm of the mindset that I need to be aware of what's going on in the economy and things and in politics, and just be aware of them. But as I make decisions in my portfolio, I actually really focus on certain key pieces of information as I make decisions on stocks and owning stocks, holding stocks. And it's almost a very dedicated focus on just some key metrics, valuations, do I believe in the business and so forth, and try to ignore the rest of the noise, because either I don't quite see a direct correlation to economic data. Like my stocks, in general, if the economy is bad, in general, stocks are going to come down a little bit, and some are going to come down harder. But if I stick to the fundamental analysis that I perform, I'm going to do far better. That's my philosophy, and I'm going to stick to it, because there's just too much data. And what I feel is I can actually get confused fairly quickly if I try to focus on too many variables. But if I try to master a couple of key variables that I believe are a successful recipe, I'm just going to stick to my recipe until it starts to fail me, which it hasn't. So I'm going to stick to it. All right. We have a question for you, sir. For algorithm, question to Daryl: How one should decide when to buy based on the charts?
Okay, so that is a really good question, and there's not any really simple answer. You can't just use one indicator, and if you try to use too many indicators, that can get you in a position of indecision. But I think the way that Victor approaches the market, and I do as well from a fundamental perspective, if you believe in the company's fundamentals, that makes the choice a little bit easier, because even if you decide to buy on a technical chart and it does go down, if you fundamentally believe in the company, that helps bear the brunt of losing money in the short term. So I'm going to pull up Google here. I started buying at the end of May through June. So I'm in at about 159, I think. Yeah, I'm about right here. I started buying in the second week. And I've not been a holder of Google before directly, but based on what the other big caps had been doing, tech companies had been doing, I just saw Google's a solid company for one, and they were really trailing the other 7 or 8 big tech stocks by quite a margin, actually. So that's when I decided to start testing the waters, and I'm glad I did, because they have been on an incredible run. If you look at these last few days, they've had 10 hollow candles, despite this one day where it was a red hollow candle, which mean it was lower on that particular day. It did open lower than it closed, so that gives it a hollow candle. So I think, and they did break out here, which is pretty good news. So I'm a little more cautious about buying it here, but man, I'm telling you, they are definitely on a run right now. For NVIDIA, I think I've showed this several times, but if I go to when I purchased NVIDIA, and NVIDIA is not a company that I would typically own. their dividend is incredibly small. I think they only pay a dividend just so those funds, pension funds, etc., retirement funds that are required to only own companies that pay dividends can own them. I think that's probably why they pay a dividend, because it's a penny
Correct.
a share,
Yeah.
0.02% yield.
It's a check the box dividend.
Yep. So with Nvidia, I bought back here, and the reason I bought is they had broke out of a triple top. So to me, that was a really powerful sign. And then they peaked, they broke out again above that top, went on another run. They pretty much consolidated for 3 or 4 months. And then back here, they broke out again. So that's on a long term. So pretend you can't see this purple bar here. Pretend you can't see anything to the right. The reason I stepped in is because it broke out of a triple top. So when it did, and I was working with some other investors that wanted to get into NVIDIA. They did not want to buy at all-time highs. And I said, that can be a mistake sometimes. And you can now pretend you can see the rest of the chart and you know why it can be a mistake. Buying at all-time highs is not something I am afraid to do. I've done it on several occasions, and it's worked out very well on those companies that I really think have an exciting future in front of them.
Yeah, I agree with that. Go ahead.
Yep. Well, just answering that question is really, really difficult one to do. It takes some experience. But basically, I'd rather be buying stocks that are going up than going down. I will dollar cost average down into companies that I really believe in. But in companies that I have any questions whatsoever, I do not buy when they are going down. Let's look at Lululemon, for instance. Whether or not I believe in the company, that thing is in a downcline right now, and I wouldn't touch it.
Yeah, I agree with
that
you.
Yeah.
Sorry.
Somebody that really
So
believes in it, I don't have any problem, with them dollar cost averaging down. It's just not something that I feel strongly about.
So speaking as a long-term investor that, kind of has read plenty of value investing books, is the fact that a stock is at an all-time high, in my opinion, creates potentially a blind spot for that investor and potentially a miss on a great stock. And I have to watch myself because I fall into that trap of, oh man, it's at an all-time high. I'm kind of violating one of the commandments of value investing. And, you got to separate yourself from almost classic kind of stock analysis at times and say, NVIDIA was at the right place at the right time. If your neighbor across the street wins the lottery and all of a sudden they have cash flow, coming into their household, their car is probably going to improve. They're probably going to move. Just a
Yep.
lot of things are going to happen. It just broke the whole mentality of their cash flow, right? NVIDIA, in a way, won a lottery, which was they were making GPUs. They started making them 20 years ago. They perfected that science and they were at the right place at the right time. Now, if I was fixated on a lot of these principles that I do believe in a little too much, and I missed on NVIDIA. So kind of putting my own lesson learned out there. Be careful not to completely eliminate a stock that is at an all-time high. All right, so I wanted to cover a request from Patagonia. It looks like we have Peyton on. Thank you so much, Peyton, for joining. I did see that the Raiders won. Unfortunately, they didn't show it on the West Coast because it was a New England game, but it was good to see that they won quite decisively too. Shadow Guy, good morning. And we are going to be covering Seagate. Now, this is an old school company. This is like when I assembled my first PC, I could have sworn I either used Seagate or one of these storage, hard drive companies. And these guys are now into big storage. Here's something that I could put my head around. I think I have a backup storage device hooked up to the PC I'm working off of, and I think it's a Seagate item. So this is a hardware company around storage. Now the stock had a very incredible run. The year to date number 118. Holy smokes. Up 86% over the 1 year. Here was kind of just not really doing much. And then all of a sudden it decided to just jump up. I imagine these guys are putting a lot of storage in data centers and the demand has really increased. And that's certainly potentially the case. They are a smaller cap, $40 billion, even after they pretty much have doubled over really the last 5 months. They've really increased in market cap, and the revenue is $9 billion. PE ratio 27, forward P is 18. Analysts think it's priced too expensively right now, and it's a buy. When we look at their financials, here's what's interesting is, the data center build out has been going on for about 2 years. It's really hit a very high pace, right? So, but why were they not growing? Right? So that's interesting. Now, looking at the quarters, 1, 2, 3, 4, 4 awesome quarters. 49, 49, 30, 30. And then 18 here. Here's where the increase started. So this is why the market's in love with Seagate, an old school hardware producer. Looks good. If an investor saw this coming, congratulations. Good job. Very good job. So revenue looks good. Let's take a look at margins and free cash flow. All right, so now this is a hardware company. Difference between software and hardware is a lot. Like when times weren't as good, these guys were, fighting because they have a lot of competition. They were fighting to get to 30% gross margins. This is not a high margin product. And now they're flourishing and they're at 35%. Well, NVIDIA's at 75%. Their profit margin is good. 16% this year. They have pricing power because they have probably scarcity in their product. They're like, hey, we have a limited inventory and we're not going to sell it for low prices. We're only going to sell it for high prices. All right. That makes sense. All right. Cash flow. So low margins. It's a low margin business. Cash flow hasn't been great. Okay. So in the past, they've been pretty good cash flow generator, 1.7 billion in 2018. They're down at 818 million. So that hardware business, their cash flow may be down because there's a lot of R&D they have to put in their product because maybe data centers have particular workloads with new requirements. And they're like, hey, we want to take, the storage and we need it to do something new. And they have to spend a lot of money and it drains that cash. So the cash hasn't kept up with that superb growth yet, but I'll give them the benefit of the doubt and expect that it will grow in the future. What are analysts thinking? 18 analysts cover it, and most of them are like, okay, this is going to be a sugar high. It's going to go up and it's going to go down. It's going to go down to $80 a share, according to one analyst. Another analyst is like, hey, we're near the very best price target that an analyst is putting out there. So this one here is going to, they have a fiscal year that ends for fiscal 25, it already ended June 27th, 2025. So we're already on fiscal year 2026. It's going to end June 30th, 2026. And we're in it. So I'm going to use this number in my valuation. It's the profits are growing by 53%. Okay. Now, according to analysts and their consensus, we're not going to grow as fast, but we're going to keep growing. The growth looks fairly good. Okay. And the profits are going to expand quite nicely. That looks good. All right. So is Seagate discounted or priced at a premium? Well, I created a valuation. I used a cash forecast on Seagate. First, this business is headquartered in Singapore. They produce their product in Asia, distribute it around the world. So since it's outside my home country, it's a smaller company, it's experienced really high growth, I'm going to increase the discount rate to 9%. It's just a higher risk for me. I'm going to start with their trailing 12 months and increase it by 1.3. Actually, let me correct that note. Just recognizing that, hey, they're really growing and that free cash flow is going to jump up. But then on years 2, 3, 4, I'm going to grow by 15%. Still a very good growth rate, but it's the hardware business. So it's not like the software business where you can add 1 million customers and your platform can take it. You just need to put more compute and other resources behind your platform. And it's very affordable to expand very quickly. Well, Seagate, not so much. They sell more hard drives. They have to buy materials, labor, all kinds of actual product costs has to go into the product. So 15% is quite good. And we'll grow that cash flow over the 4 years. Terminal value will grow at 4%. And the intrinsic value of all that cash is $24 billion. I'll add the cash on the balance sheet. The debt is at $5.3 billion. So it gives me an equity value of 19.5. Market cap is $40 billion. So we're way over our skis, or I should say investors are way over their skis on Seagate. If we look at the cash, and this cash forecast is a little optimistic. I'm not like thinking, conservatively here. This would be very good for them to accomplish. And the thing that I fear is once storage is in place, it's going to, the sales growth is going to slow. It's going to go down. So that looks like a cautionary number. We look at earnings per share. I'm looking at the earnings per share for fiscal year 26 and using a P at 25. I can't go past 25. This is a hardware company, low margins. There's no way I would go above 25 and grow by 10%. So you could get to a discount if you just focused on earnings per share, but I don't do that because this is the number that tells me long-term stocks will revert to their intrinsic value based on free cash flows. So this one's priced 17% too high. Coincidentally, I think the consensus analysts had was it was priced close to 20% too high. I'm right there with consensus. Seagate is too expensive. The money was made by investors who saw this 9 months ago, acted. They're sitting on a beautiful gain, and that's how I see it. I'm really glad you brought it up because I hadn't looked at Seagate in a long time, and this is a classic technology company, and I'm glad that they're doing well due to this data center build out. You have any comments on Seagate?
I can look at the chart. So they broke out of a triple top back in September of last year, and then again in October, and then again in January. They had the big sell-off in April, just like other companies, but they did break out above that triple top on May the 13th, and it doesn't look like they've stopped then. One of the technical signals that I would have been looking at if I had any interest in this company, other than owning a bunch of devices. I own a lot of solid state devices from them. This crossover right here on the PPO would have been a really good signal to buy on. So even though they were way below where they were here, when that PPO signal was in bearish territory but had a bullish crossover, that would have been a point to at least start looking. And then when you just see it continue to increase, that would have strengthened that signal to buy into this one. At the same time, you had an RSI that was sitting at 40. Once that crossed above 50 from a negative 15 or a 15, rather 18, that would have been a really good time to step in. So you have confirmation on both the RSI and the PPO that this was going to be moving higher. At the same time that I buy, so getting back to that comment about when to buy, I would have already had my sell point in mind. So if it traded higher maybe for a couple days and then fell back below my sell point, I would have been out or at least trimmed it. So knowing when to get out is just as important as knowing when to get in. But anyway, getting off that topic, I mean, they broke out and they have been on a really good run. They're getting very extended from their 200-day moving average, which sits at 110, and they're trading at 188. So they're also overbought. So they were overbought starting in May all the way through July. I know a lot of people have rules. They don't ever buy when it's above 70. They missed out on a lot of opportunity here in this one. I don't necessarily recommend that, but having a rule, just a flat rule like that, probably needs to be rethought. I can find many cases where a stock ran up much higher even when it was considered overbought. But they are getting into overbought territory again. Can they go another 2 months in overbought? I don't know. In the past, it's only been a couple weeks at a time. I go back maybe a couple years. Yeah, you don't see it stay in overbought territory very long. So this is an unusual case. I'd be careful here, but
so let me
looks
come
like
back to a comment you made that I totally agree with, and I think it's worth repeating, which is, when you think about a stock like this and you begin to invest, think about your exit plan, as you are getting into the position. It's a very important point. On a company like Seagate, right? My kind of qualitative assessment, high level assessment of Seagate is they've been around a long time. Are they going to flourish for the next 10 years? No. Why? Because they're in a area of technology that has many competitors, a lot of innovations. Many of those innovations have made Seagate's product less preferred, less valuable. Could there be innovations around the corner that the storage innovation just leapfrogs the whole paradigm that Seagate is on? Yes. So there's just a lot of forces that would lead me to believe that Seagate is not a desirable business over the long haul. If it's discounted, it might be a really good, a really good stock to own for a period of time. Or if you're seeing a condition in the market, and you'll have to again qualitatively assess, okay, is the data center build out going to last for the next 10 years? I'm of the camp that no, it won't. It'll bankrupt a lot of companies. I think it's temporary. It'll be maybe another year from now. I don't know. It's my best guess. But at some point, the demand for Seagate product is going to wane. Having said that, having an exit plan on Seagate when the investor bought was a good idea. And I have a couple of stocks that I have an exit plan already in place because I don't believe that company in that industry has long-term, appreciation ahead of it. Like let's say a Meta, it's social apps. Those things are going to keep growing for the next 10 years. That is a long-term hold. But I have some material stocks that I believe I'm buying while material prices are low. And as material prices increase, those companies are going to flourish. Well, I already have sell prices on those stocks. I'm getting out as soon as I hit a particular appreciation target, I get out. So that was a very good point you made, and it was worth repeating. Seagate is up. It's up and trading today, continues to rally. Patagonia, that was Seagate for you, sir. Good luck with it. I don't know if you're an owner, but if you are, congratulations. Hopefully you bought near the trough and you're making tons of money. You are up 43%. Nicely done. Buying some old school technology. Nicely done, sir. All right, we're off to the races. So stock market has opened. It's opened in the green on the S&P. The NASDAQ's up 0.72. The Dow is lagging. When we look at the heat map, what stocks are going up, what stocks are going down. NVIDIA, Broadcom, it keeps going up. Incredible. Meta's up nice. All right. I knew it was going to be a good morning. Google is up nicely. Amazon's up. Software is kind of up and down. Some stocks are up, some stocks are down. Financials, boy, they got beat up late last week. And curious to get your opinion on this. So I'm expecting lower interest rates. Why would financials be selling off if the expectation is lower interest rates? Do you have any thought on why?
Yeah, I was thinking about that Friday too when we talked, and it's not clear to me just yet why the financials are taking such a big hit.
And look at telecom.
It's
It's
probably
getting
real.
smashed. So why is telecom getting smashed today?
Yeah, well, with the technology being up so high and seeing so much green there, it's usually a defense versus offense kind of a trade. I see that a lot with the telecom.
Mm-hmm.
So it could
Yeah.
be just people are risk on today.
And I don't know that the market's in a full risk on, approach or posture because not everything is up, right? Some software pieces are down. Healthcare is down. That does support the risk on move. I don't know. We'll give it a little more time. In the
Yeah,
meantime,
the Dow is down at the moment while the S&P and Nasdaq are both up.
interesting.
And Nasdaq's up 0.75%.
So let's jump over to Starbucks. It's a stock that Jan wants me to look at. And the question is, so you're looking at Starbucks at these levels. Let's take a look. Year to date, Starbucks is down 7.7. Today, it is down 1.49. Over the 1 year, it's down 8.86. And they hired a CEO, and the CEO, created a splash, but the stock is not going anywhere over the 5 year. But looking at, and I'm going to love to see Daryl's charts on this because I think his work is going to reveal a lot. For now, I'll just say high level, this stock, the market and the company and the industry is not deemed to be very desirable by the market. The market cap of Starbucks is $95.95 billion. Revenues are nice and high. The PE is high, and we'll see the growth rate. I do have a valuation on Starbucks, and we'll look at that after we go over fundamentals. The forward P is 33.73. These two are high because they're not growing very well. If you have PEs like this, you have PEs like Nvidia. You have PEs like Microsoft. You have PEs like, this is higher than Google, and Google's growing at 13%, and their margins are massive compared to Starbucks. This is a restaurant. Margins are low. Analysts think it's discounted because they're basing this just on earnings per share. So let's take a look at their financials. So this is why the PE is high, in my opinion, is growth at 0.58%. Not good. And then growth for the full year, 0.5%. Now, this new CEO is coming in, and he's trying to get the company to grow at these levels. Okay. And so far, let's take a look at the quarterly. The growth is getting better. So we're up to 2.32%, 3.75. There was a string of 4 bad quarters, but it looks like they have gotten off the floor and are picking themselves up here. That looks a little better. So let's take a look at, while we're still in the quarterly, I want to look at the profit margins and see if they've improved. I also want to see maybe their free cash flow, but free cash flow may be something that we have to ignore a little bit. So gross margins actually have gone in the wrong direction. So we were at 25, 27, almost 28, 26.5, and then we got to 24.5, 21, not good, 22.8. Now, what could be eating away the gross margin? Gross margin is delivering one additional unit of your product or service. And delivering that unit, like we just talked about Seagate, you would deliver a physical product. You would put a product in a box and ship it to your customer. And that product would have material and it would have labor. The direct labor in order to assemble that product that you're putting in the box and shipping it to your customer. All variable product cost, prime cost, as accountants would call it, is what is calculated into gross margin. Each additional unit, Starbucks is making 22.8%. So the coffee, I think coffee prices are up substantially. And Starbucks has to be careful, because if they start changing their menu and they go, hey, a cup of coffee, and I don't go to Starbucks all that often anymore. So forgive me if I'm wrong on coffee drink prices at Starbucks, but I think last time I was there, if I order a 16-ounce coffee, it'd be about $3 in California. Well, if all of a sudden they're like, hey, we have a coffee surcharge and it's $5 a cup of coffee, I'd be like, I'm out of here. Not only that, I'm never going to come back, or I'm not going to come back for a long time. So they have to be really careful with pricing. And I think they're taking it out of their margins because coffee prices are much higher, and that's eroding their profit. That's kind of a bad luck. You know, that's not the company's fault. It's not management's fault. But as an investor, right, we're investors here. We're trying to put in $1,000, $10,000, $100,000 into a stock. And we want to wake up 5 years from now, and we want that to more than double in value, in price, right? We put in $10,000. We want to wake up 5 years from now and it's $20,000, or even better, $30,000 or $50,000 of price. And we're like, great, mission accomplished. And when we look at a business like, when I look at a business like Starbucks, it's a restaurant. This is why I don't like restaurants, is they have to buy ingredients, coffee, milk, all kinds of, ingredients. They have to hire a large army of employees. They think of all their stores, all those employees, you have to pay them, you have to manage them, you have to hire them, you have to train them. I mean, it's expensive. So, and then the real estate that Starbucks has, it's not cheap real estate. You go to New York, Starbucks is all over the place. Well, I'm sure those corner retail spots in New York are very expensive. So you end up with a company that has a profit margin of 5.9. Historically, their best year is 11.5. That's just like, I don't want to be in that business. When I was a teenager, I did work in a restaurant. I know how hard these folks work. I respect it totally. But now I'm an investor putting capital out there that I've worked really hard to accumulate. I've earned it. I grow it. And this is why I don't like restaurants. It's not because I'm just out of thin air saying, oh, I don't like restaurants because I don't like restaurants. I don't like their margins. I love their coffee, sort of. I like other brands a little better than Starbucks, but that's just my preference. All right, so we're on the gross margins is not good. We're going to look at the forecast. I think their balance sheet's decent. I'm going to look at it just to make sure. 24 analysts are covering them. Now, Starbucks is a little bit of a, the press covers Starbucks big time. And I think it's a good story for the press because everybody understands what Starbucks does. A lot of people are Starbucks, customers. And, I get it. So these analysts are probably giving Starbucks a positive rating. And best rating is $115 stock. Worst one is 76. They're all basing it on earnings per share. Okay. Earnings per share is supposed to expand a little bit. And it's supposed to grow their revenues quite a bit. And they're going to make the PE ratio come down if their profits go up. But for now, it's just a really high PE. Again, I could buy with a 37 PE, I can buy some fantastic technology stocks. I could buy some stupendous healthcare stocks. I could buy so much better margin businesses with that type of PE. So let's look at the balance sheet just to make sure I'm looking at that. 27.9 billion. So they do carry a little bit of debt. And I don't think their debt to EBITDA. Well, it is getting a little concerning. 3.17. 3 is my limit. I think 3 represents a business that's in good condition. If you're under 3, you're slightly over 3. I don't think it's a big deal so long as they don't get any higher, but it's not a perfect balance sheet. All right. So that's where the fundamentals take us. Now let's take a look at the valuation for Starbucks. So I have a slightly higher discount rate because of their balance sheet. And this is no bueno. That's not good in Spanish. And it's just, man, I'm staying away from Starbucks. Don't want to buy a Starbucks stock. No, thank you. I'd rather find the next high profit, high cash flow business to put my money in and avoid Starbucks for me. So that is Starbucks. Any comments on Starbucks, Daryl?
I got a chart.
Perfect.
So you've seen me use these charts before. This is a 20-year trend chart. I created this one 2 years ago, put this channel on here. So basically I try to connect the top blue line that's going across to as many tops as I can connect. And then I copy and paste that again and just drag it down and connect as many bottoms as it'll connect to. And you can see I created this 2 years ago. There were a lot of people I was working with that were really excited about StarBucks. And I tried to show them this chart that says they're basically falling out of a 20-year trend channel. A 1-month trend channel doesn't mean too much, but when you look at 20 years worth of data, it means a whole lot more. So once it started breaking out of that 20-year trend channel, to quote Victor, it was no bueno. So even though when they got the new CEO, there was a lot of excitement. I mean, he's very talented CEO. He did great things for Chipotle Mexican Grill. Took that stock to incredible heights. I'm sure he'll probably do well here, possibly. But look where the stock is even after his announcement. A lot of people bought in up here, excited for these changes, and now it's sitting at $84 a share, back where it was in April of 2024. So we'll look at a more current, or not current, but we'll look at a 1-year chart. Basically, they've been trading sideways for 3 months since 4 months since June. Been trading sideways, and now they've started on another decline. Back to they're not very far away from the April and May lows. They're trading below their 200-day, 50-day, and 20-day, and all of those are downward sloping. So they got a lower RSI, PPOs in negative territory. Money flow has been negative since July. So as far as I'm concerned, this would be a no-go.
I agree. And I want to quote Mr. Buffett, the great Warren Buffett. And he basically, when you look at a company, do you buy a company because of the CEO, or do you buy the company because it's a great business? And it's the latter. He doesn't buy businesses because of a great CEO. He buys the business. Now, is it positive to have a good CEO? Absolutely. It's better to have a great CEO. But you put a CEO in charge of, a highly valuable business, let's say a Palantir. I think any CEO would probably see the stock just flourish because the fundamentals are so darn good. Whereas you get a business that has low margins, there's going to be some positive there, but it's the business itself is what I'm focused on. I have very little. I can't say that I'm completely oblivious to the management team. And I would also say that some managers, like the Intel CEO, he did terrible things. So I would say I'm not oblivious to it, but I would say I look at the core business. Thank you, sir. Jan, thanks so much for your question. That was a good one. Thank you, sir. So I'm moving to the next comment, and it looks like we have a super chat. Ben 10. Rubric. Let's take a look at Rubric. Please let me finish a thought that I had begun, which is two stocks are up nicely. Robinhood is being added to the S&P, and that type of move is not like it's not like Robinhood created a new product and the stock's rallying. It's just because a lot of ETFs are going to start to buy Robinhood. Robinhood's a big position in my portfolio, so I knew it was going to be a good morning. And we'll just let that one fly. And the other one I have a small position in is App11. It's going to be added to the S&P. So both of these stocks are just flying. And then ALAB is flying high. What is going on in stock land today. Things are now. I better knock on wood because I don't want to jinx this. ALAB is up, and this was one of the stocks that I wanted to cover. I put it in the chat and I talked to Daryl because this is trading well above intrinsic value. It's a stock that I have. I've already sold a third of the position, but it keeps flying up. I kind of decided I'm just going to let this thing go as high as it wants or as low as it wants. But I really like the business, but I just think it's priced really expensive. So enough of that. I think Ben 10 wants to look at Rubrik. Rubrik provides data security solutions to individuals, businesses worldwide. The company offers enterprise data protection, unstructured data protection, cloud data protection, SaaS data protection solutions, and identity provider services protection. So this is a cyber security stock. Perfect. And we have looked at this in the recent past. I do see how it's nice and flat up here. This market's trying to figure out, do we go up or down? Today it's going up. What's going on with this market? It's kind of, some stocks are going up, some stocks are going down.
Yeah, my personal portfolio is taking it pretty hard today, but I'm pretty defensive.
Nice. You got to be a good stock picker, I guess, in the month of September here, because some stocks are down and telecom is getting beat up pretty good, but some stocks are up. Rubrik is up. So Rubrik is a cybersecurity stock, $18 billion market cap, revenues of just about $1 billion. So you're paying about 19 times revenue for the company. Not profitable yet. No big deal. Let's see what their fundamentals look like. This is a very nice growth rate, 43.89. They're knocking on the door of being $1 billion business, growing at last quarter. Look at that. The revenue is accelerating. They introduced themselves to the market. Customers are finding the product and they like the product. That's my conclusion on these numbers. That's the story that these numbers are telling me. That is the story that numbers are telling me there. Gross margins. Get out of the way, Starbucks, 22%. Are you kidding me? 78. That's what we're talking about. Why? Because this is a software product. Rubrik writes their code and a new customer shows up and says, hey, I want to buy 1,000 seats of your software because I have 1,000 employees. They go, perfect. Sign here. This is where you're going to pay us. Go download your software over there. You don't even have to ship a physical product. They just download it and then they set it up. You give them instructions to do that. You give them some support. And now, will their servers need a little more horsepower? Yeah, but it's very affordable. It's almost like, of course they're going to consume more power because you have another customer putting 1,000 users on the platform. So it's very affordable to add incremental customers. That's a fantastic number. So we have two fantastic numbers: growth in the 40 some odd %, gross margins that are expanding into 78%. Looks good. They are cash flowing. Now the cash flow, so they're maturing, right? They're knocking on the door of $1 billion of revenue, and their free cash flow is beginning to take shape. Okay. Let's take a look at what forecasts are out there. 17 analysts are covering them. One analyst believes, hey, these guys are going to be worth $125 a share. Another analyst is like, you know what? I don't believe in these guys. Overall, they're priced fairly according to the analyst. The revenue is supposed to really continue to expand. There'll be a $2 billion business in 3 years, 2 years, closer to 2.5 years. That's really good growth. That's very, very good growth. So that looks really good. All right. So let's take a look at a valuation that I have for Rubrik. I thought I had evaluation. No problem. We can create evaluation. Did I type that wrong? Nope, it's not there. So last one I thought was good was Fortinet. So let's go to the zone of cybersecurity. Created Okta a little while ago. All right. So let's take a look at, we're going to build, and while I do this, would you mind looking at the charts on Rubrik?
Yeah, it'll be fine.
Perfect. Thank you, sir.
So it looks like they IPO'd in April of last year. Done very nicely since then, raising from about $37 to $94 at the moment. Let me go back to a 1-year chart. And they did have a breakout above a somewhat of a double or triple top here around May. They rose up to 103 or so, and then once they got back down here around June the 9th, they've really gone nowhere since that point. It's been consolidating for 3 months. You can tell that by the RSI being almost flat. The PPO had a bearish crossover in bullish territory about this peak. So from a sell signal perspective, that would have been something to start looking at, trimming. Since that point, we've gotten to about July, and the PPO is just completely flat. The money flow is negative at the moment, despite being higher today by $5, $3 a share, 4%. So that's what the 1-year chart. I don't know exactly what to expect unless they break out above this 103 price. Then they could run a bit higher. If it hits that and turns back around, then I'd be a lot more cautious.
Very good. So Rubrik, now, as I mentioned before, there's certain numbers that stick out that compel me to really dig deep. When you have high revenue like this, and then you have high margins, I'm like, okay, this is worth the additional analysis, and that's what I'm doing. I'm looking at cash flow, and I've got the quarterly open just so I can look at each quarter and try to get. This is a really young business, right? Now, when you forecast, a lot of what we do is both art and science. There's the science part, mathematics, arithmetics, and so forth, data science, and so forth. But now I'm in the more art side. I'm looking at their quarterly. I'm seeing that they do have a little bit of a cyclical, kind of an annual seasonality kind of effect. And I'm trying to make sense of it. Now, I do have a lot of experience in software, enterprise software. So what they call their Q2 ends July 31st. That's in the middle of the summer. And then we have the fall. This is around the Christmas time, ending January 31st. And then the spring, summer, fall, winter. So budgets tend to be released toward the end of the year. November tends to be when, hey, I've got budget to buy something for the next year. So they may be jumping on top of that. Like customers are switching over when the budget cycle begins for a corporation. Hey, I have dollars in my new year budget, so I want to buy your stock software Rubrik. So I'm seeing that seasonality. So that's fine. I'm going to take the trailing 12 months, these numbers, and that's going to be my starting point for free cash flow. That is 36.81, 78 million, 18 million, and negative 29.67. Now, the reason I'm doing that is when I go to the annual, trailing 12 months. No, that is correct. Okay, good. I could have sworn it was showing me a 38 previously, but I was wrong. Okay, so that looks good. So we've got good cash flow. We've got a negative forecast on earnings per share, so I can't use that. Let me just take a look at balance sheet. I'm pretty sure they're fine, but let's take a look. 762 million of cash, 364 million of debt, meaning they can write a big check and pay off debt immediately. They don't have any debt. So cash 762, debt is 364. All right, let's get cracking on evaluation. So I've got Rubric in here. I'm going to a 9% discount rate because they're tiny and they're new, higher risk. Their competitors may not have seen them coming. Now their competitors are going to pay attention and go, who's this Rubric company? Why are they taking my customers away? We got to start battling with these guys. So I'm going to go with their trailing 12 months cash flow, and I am going to, they're growing at 40%. So I'm going to grow that first number by 40%. And they're actually growing by 43, 44%. So that's going to be my starting point. Now, I'm not going to stay at 40. I'm going to go to 30. That is very achievable for a small business like this, but it's also a little conservative. It's lower than their growth rate. All right. So free cash flow, 762. And then 364 million. The shares outstanding, 193. So the cash flow hasn't quite matured enough for me to drive a valuation on Rubric. Right now, they got to grow and they got to show me better fundamentals before I can go any higher. I'm going to delete this because they don't have earnings per share. So it would drive a 0. So this is where I can get to on Rubric. Is it an investment worth making? For me, no. Reason for it is right now I really like Fortinet. It's discounted by 35%. I've made money on cybersecurity. I can make money on Fortinet. I made money on Zscaler. I saw Zscaler discounted. I bought it. The cybersecurity space is really competitive. It's not like, hey, Rubric's going to be the best for the next 25 years. No. You go study the history and you'll see the leader 20 years ago is probably McAfee. And then 15 years ago was somebody else. Cisco is a big player, like way back when. And, the bad actors keep changing what the threats are to an organization, enterprise. And then a new company gets created. Hey, we do better cybersecurity in the new way that we're using data and technology. So this one here is a pass for me. It's not valued high enough. I'd really have to stretch, like I'm growing this by 1.4. Let's let a couple more earnings come out. And if they exceed the expectations on free cash flow, if they really start showing that, hey, our margins are here to stay, our growth is here to stay, it might improve this. This is already a pretty, I think, objective and slightly optimistic forecast. And with that, I can't get to their stock price. So Rubric is a pass. And the other thing that I would keep an eye on is, so Rubric's doing well, most definitely. Their competitors aren't going to sit around and say, oh yeah, let's just let Rubric keep growing. They're going to compete against these guys. They're going to take notice and say, how do we compete against these guys in a better way? The stock hasn't really moved in 3 months, 4 months. So maybe the market is thinking, hey, you know what? We're getting over our skis on this one. So those are my comments there, Ben 10. Hope you found that interesting. And some comments coming in. Yeah, Rubric was good about it half a year ago. Absolutely. Yeah, I agree with that. All right. So good stuff on Rubric. Thank you so much, Ben 10, for the super chat. Thanks for bringing up Rubric. It is an interesting company to cover. All right. So let's go S&P. What's going on? Some stocks are flying and some stocks not so much. Broadcom keeps going up. What's going on with Broadcom, Daryl? Why is the world buying Broadcom like it's a Taylor Swift new LP?
Yeah.
Back when we used to buy LPs.
I think they're looking at them as being competition to NVIDIA from a custom ASIC perspective.
Yeah, I get that. You're just paying a lot of money for Broadcom.
Yeah, we'll have to keep an eye on it. So,
and if you think about what Broadcom does, well, AMD can do the same thing. Qualcomm can, meaning they can design a new chipset that's optimized for AI. Intel, if they can get out of their own way, can do that. AMD, Qualcomm, Texas Instruments. You have a lot of semiconductor companies that are fabless, so it's very easy for them to design and then get into production by using TSM. So the story, I just don't know that by claiming, oh yeah, we're going to start designing a new chipset, that's just not enough for me, but it's enough for a lot of investors that are flourishing with Broadcom.
Now they haven't reached their high that they reached on Friday.
Uh-huh.
So
really,
you can see these two candles here. It went up to high was 356 on Friday. And they haven't reached that today. They're at, the high today was 354. Now it is a hollow candle at the moment, but you can see the long tail on the top means it peaked up and is pulled back some. So it hasn't eclipsed what it was doing on Friday. We'll have to see if it can close above the halfway point from this body. That would be nice to see. We'll see. Their PPO is moving positive. They are in overbought territory at the moment. Looks like the money flow is starting to come back out despite the price rise.
Interesting. Yeah, semiconductor, geez, I'm just amazed. And at one point, well, the data center here's a observation that I continue to make and just kind of go, okay, well, what's going to happen to these valuations? So the data center is being built out to enable AI applications, use cases to be developed and then delivered to consumers and businesses. And then value would be like a business could do certain operations with agents and machine learning and serve its decision makers as well as every employee better information, data, and that person can be more efficient. I don't know that AI is not delivering the same amount of value that the cost represents. They're basically spending like $1,000 and getting like $10 of value at this point. That's my observation. The ROI is not there, and there's some published work out there that substantiates that. So as we see these humongous investments in data center and so forth. I have to like keep going back to, I don't get it. Like, it's like the pizza shop scenario that I use. You think, okay, everybody's going to want pizza. It's football season. So I'm going to buy 20 ovens and start 3 new stores. But you look at the actual pizza consumption in that region, and the pizza consumption's not going up. So what happens to the business that bought 10 new ovens and opened 3 new locations? They're really going to suffer because they put a lot of capital into that and they're not selling more pizzas. The pizzas represent the actual value of AI. So I'd love to be corrected and informed on where AI is really making a big difference to the world. But we'll see. We'll see. I'll continue to observe that and see how it changes. Were you going to show something on this slide?
No, I just pulled it up to take a look at it. This was the semiconductor industry when it broke out back in May. So another chart that's useful. When do you buy? This would have been a really good indicator. So this has been a chart that I've had for several months, probably back in April. But you can see this downtrend line, and then when the semiconductor industry broke out above that, you can see what happened after that. So even though we were all scared to death back in April because of the tariff, the market started doing something a little different with their money. So it's better to watch what people do with their money rather than what comes out of their mouth.
Yeah. Okay. So little J, where is the September pullback? Yeah, we're not seeing one yet, but be careful because we may be in an ugly one in 2 weeks and we'll be like, oh man, we angered the stock market gods and now they've created bad weather for us. All right. So, yeah, and I hope we don't have a pullback, but we'll see. We'll see. Let me catch up on some comments. Go ahead.
Last year was an up year. We were up 2% in September. So not all Septembers are negative. The year before that, we were down 4.9%. The year before that, we were down 9.3%. The year before that, we were down 4.8%. Down 3.9% the year before that. So the last 5 years, we've only had one that was positive. So just keep that in mind. Hasn't shown itself yet, but it can still show up.
Agreed. Good morning, Sebastian. Good morning, Carlos. I think I already said good morning. So Mike, the dividend investor guy, CRMD is getting killed. Healthcare is getting smashed this morning.
Yeah, it is.
So CRMD is a small cap and it had been flourishing. And it looks like it's not getting fully smashed. 2.26 is down. Yeah. So healthcare is not where the action is today. It's generally down, and it's generally down when stuff like this happening. Hey, let's all buy Broadcom. Let's all buy Nvidia, Microsoft, Palantir, Uber, Google. Well, Google's not doing that great. Meta. I mean, these are massive caps. A 1% move on Meta is how many billions? So they're 1.8 trillion. So that would be $18 billion of data of capital going in. This is more like $75 billion of capital flowing in there. This is, I mean, you look at the billions of capital to buy these shares. It's huge. So investors are like, well, I'm going to sell some of my healthcare. I'm not going to buy healthcare while other people are getting out of healthcare for other reasons. Utilities are down, real estate's down, materials down, energy's down. So it is kind of a risk on day. And we'll see how it closes today. Good to see you, Mike. Yep. Hood and AppLovin stocks are up nicely. Good to see. Great to see. Tim, Seagate and Western Digital. Yeah, Western Digital, that's the competitor to Seagate. Those are the hard drive companies. Now they call themselves storage, but we called them hard drives back in the day. And by the way, I don't drink coffee, but recently we had a Dutch Brothers open up. They have been killing Starbucks nearby. Yeah. And, family trip about 10 years ago, we were in Oregon. Beautiful state, by the way. If you get a chance to travel Oregon, I think I could spend a couple months along the Columbia River near Portland. It's beautiful. A lot of waterfalls and so forth. And Dutch Brothers started in Oregon. And we went from Portland to a couple other towns. I forgot their names. And we ran into Dutch Brothers. And it happened to be somebody's birthday, my birthday, or my son was born on August 10th. And they go, hey, free coffee. No, it was our first time going to Dutch Brothers. And we go, hey, they were from out of town. This is our first time at a Dutch Brothers. And they go, well, your first time at a Dutch Brothers, you get your whole experience free. So as a family of four, that was very nice of them. Thanks, Dutch Brothers. So they are pretty tasty. I don't get into the fancy drinks. So, all right. So ALAB flying high. Go ALAB. So biggest gainer is AMRZ. AMRZ. What company is that? Amrize or Amriz. They do building materials in North America, incorporated in Zug, Switzerland, up 2.5, year to date up 7. So this is a new issue. They issued stock June 23rd. Interesting. Good luck with that one, Shadow Guy. Biggest gainer, Oust. Ouster. What did these guys do? Whoa. Hold on a second. What's going on here? Whoa. LiDAR sensors for automotive, industrial, robotics, smart infrastructure. Okay, you have my attention. All right, so this is a pretty sophisticated drone there. Looks like a robot. So the city, I live in an unincorporated area, but which means we're not a part of a city. We're right next to Irvine, if you've heard of Irvine, California, and they have bought these self-guided little robots that are meant to go around and finding potholes or cracks, dangerous cracks on sidewalks, and then reporting them back to the city saying, hey, we ought to do a maintenance over here because so forth and so on. You could actually take a selfie with these robots. The city has said you can go up to them and you can do a selfie, and the robot has like a little face and it'll basically show its little face and smile. So that's what's going on in my neck of the woods as it relates to LiDAR, robots, and all that stuff. 4% higher. This is a $1.67 billion market cap. Revenue, $125 million in revenue. Not profitable yet. Strong buy. 1 year looks good. So what's going on? So growth looks good. It doesn't look incredible though. It's a small company, right? It's $125 million. It's not anywhere near $1 billion, and they're growing at 26%. So I would think that they'd be growing faster, like 100% or higher. So free cash flow, Not quite yet, but they're getting better. They're moving towards free cash flow. Margins are getting better at 42. Okay. So this is really good stock price performance. Incredible. Congratulations on Ouster. You have any comments on Ouster, Daryl?
I do not, but it looks interesting.
Yeah. All right. So that's Ouster. Yep. Agree on that. Lyft is up. All right. Look out, Uber. Lyft is in your rear view mirror. This stock's done well for the year to date. 1 year, 53. This stock has kind of lost ground to Uber. So the long term, right, is okay. That's done. I've always thought Lyft might be a good idea because they're totally an acquisition target, $7 billion to get their customer base. I think that would make a lot of sense to Google with their Waymo business, Tesla, they're trying to launch their robo-taxi business. Yep. Uber is partnering with two companies. The Uber is going to use an EV company. The name escapes me, and they're going to use a self-driving technology from Neuro. And so somebody could acquire Lyft, and all of a sudden you have access to a very big customer base. It's not as big as Uber's, but boy, it's going to take you a long time to grow your customer base, get a lot of people on your platform. Lyft totally makes sense from that perspective, but I own a lot of Uber. I don't want to own two, especially if I believe Uber's kind of won the war, and I'll be owning Uber for a long time. But good luck with Lyft. I think it's a solid idea. When I look at, I think I have Lyft and evaluation. Let's take a look here. Yeah, Lyft is discounted. Very nice discount. They cash flow. They make money. So not a bad idea. This is a value investor recipe for success here. Buy a stock that's really discounted, that provides really good fundamentals. Not a bad idea. All right. So a lot of comments today. Thanks, everybody. So blocks for fun.
No.
So did you have an answer already?
No.
So Dow, the stock, right? So
yeah.
So my answer is yes in the future, but I can't tell you if it's a month, a year, or 3 years away. This is, in my mind, Dow is a business that has some good products, and they just have had a terrible couple of years, and it's gotten worse. When we look at their fundamentals, right, they're not growing. They had a strong pullback, and their fundamentals keep getting worse. But if they could stabilize and then begin to grow a tiny bit and recover their cash flow generation, recover their profitability, then maybe we have something. I think this stock will at some point will be a good stock for a value investor, somebody that's looking for long-term appreciation, not necessarily in tech that's related to growth. I think Dow would be a good one to keep an eye on, but I don't think it's going to change in the next 12 months. So thanks for the question.
Yeah, if you're a young investor, I would stay away from that one.
I'll co-sign that comment. So yeah, we're not having a pullback. Very good. Oh, so CRM was down further, huh? All right. So Daryl, does Google show any signs of weakness for a pullback in the short term? All right. Now we're getting to some.
If you had asked me this in Friday's live stream, I'd have said no. But today I'm going to say yes based on based on the shape of this candle. In fact, I was trying to buy this day. This was an all-time high. It just never would hit my price. So I missed out on a few shares by, not paying a higher price, but I'm still in really good shape with Google. But I heard another podcaster say he wouldn't touch it with a 10-foot pole. And I thought, man, you really need to go do a valuation because I think they're underpriced. But anyway, that was his opinion. I had my opinion. I was willing to buy it even after he said that. And
Yeah.
they ran up a couple more days, but look at the shape of this candle. So that's why I changed my opinion today. And you asked for a short-term pullback. This is turning into a shooting star. So that usually indicates a short time reversal. So you might be able to pick it up a few dollars short. Lower here, and I'll be watching this over the next couple days because I'll be adding if it does.
I can't argue with a short-term pullback. That's definitely possible because this stock's gone up so nicely over the last 30 days that I could understand some investors want to take profit. But long-term, this one is Google Alphabet is going to be a big winner. And it's already a big winner in my portfolio. But I think great days ahead long-term for Google Alphabet.
And this candle here is inverted from this one and this one. So when it happens on the bottom with the long tail, then it's a short-term reversal. And it certainly did that. Here was another short-term reversal, and it certainly did that. This is a short-term pullback, in my opinion.
All right. Watch it. Okay. So moving on the comments, and my international pronunciation is off this morning. I think I forgot how I said it, but it's pronounced Zook. It's a Swiss name. Thank you, Shadow Guy. Hammer candle. Is that what you were talking about earlier?
This is a shooting star here. These are hammers down here.
Because they have a handle toward the bottom. Got it. Cool. All right, perfect. All right. Let me take a look at the market and then we'll end the stream. We are fully in the green. Look at that. Nice green. Russell's lagging. It takes a little bit of time. And let me make sure. Oh, hold on a second. I think I missed two stocks. So we've got Ben 10. Anyone have TLS on the radar? Telos Corporation, together with its subs, provides cyber cloud enterprise security solutions in the United States. Okay, so these guys are okay. So they're a software company similar to Rubrik or Zscaler or CrowdStrike. They are doing fantastic. Wow. From August 8th to now, it's tripled in value. Close to tripled in value. Incredible. They announced on the 11th, and that's when the stock just shot up. What happened? Growth happened. So they grew. If you compare Q2 to Q2, now they hadn't been doing all that great, but it looks like they've now are growing. Maybe they have new products. This one's completely off my radar. Never looked at it. Wasn't aware of it. It's a tiny cap, 458 million, revenue of 116. They do have profit coming up next year. So last quarter, they grew at 26%. They're not cash flowing. So now the margins are not as high as Rubrik or Zscaler, CrowdStrike, Fortinet. Those guys are at like 70 to 80% margins. Why are these guys not higher margins? They may not be a pure play software intellectual product company. They may be actually providing a service and they have to hire people as they grow. And that might be a limitation on their valuation. So this one here, I think, is a little, there's not enough there for me to be an investor because you got to keep growing. Okay. They were probably sold off big time. There's a reason why they were at $2 a share. The market was not believing that they were going to be relevant. That's a nice way of saying that they could probably not exist in the future. But then they started to grow and it's like, whoa, hold on a second. Maybe these guys aren't going to grow and they're going to become a player. And they may, but I would study this company closely. This is going to be more of a qualitative decision for you. It's not going to be based on fundamentals. If you think these guys are going to be bigger and a more viable company, then that's the basis of your investment. But it's completely speculation, qualitative kind of decision making on Telos Corporation. Any thoughts on Telos, Daryl?
No, none for me, Victor.
All right, perfect. All right, so I skipped that one. Sorry about that. Ben 10. Do you think Dave will have a good stock load up before interest rate cuts? Yes. I think interest rate cuts will help Dave. Most definitely. Merck. Oh, man. When will Merck ever come back? You have any comments on Merck? They've just been not doing well, not growing. Stock's miserable. Nothing good to report from my side.
Yeah, it's not one that I follow, so I don't know much about it.
Yep, perfect. All right, everyone. Thanks so much. We got a lot of attendees this morning. I really appreciate it. Let me wish you successful investing this week. Looks like you got to know which stocks to buy. We've covered all these actively. I'm a big Uber investor. Glad to see that in going up. Tesla, Amazon, Microsoft rewarding investors. Palantir has kind of had a rough 30 days, but it's up today. Nvidia, Broadcom. Booking is up a little bit. GEV and Walmart. United Healthcare is standing up tall within healthcare. I think it's going to keep going higher. So looks good. It looks like a little green is appearing in financials. Look at that.
UNH reaffirmed their full year guidance, so that was good news for investors today.
That is good news. All right, sir. Well, thanks so much for co-hosting, and everybody, thanks for attending. We're going to do the same thing on Wednesday morning and then on Friday morning, and look forward to seeing how stocks trade over the next 2 days. And then we'll reconvene in a couple of days. I will stream in the evenings when possible. We'll see if I can do it tonight, as well as other evenings this week. I'll try to post early on when I'm going to stream in the evenings. So everybody, thanks for tuning in. Have a great day. Good luck. We'll see you, Daryl.
All right. Take care.